Why psychology is the real deal? So we have two traders, same strategy, same signal, same market environment, and they are completely different result. The result is always mental. Hello everyone, welcome back to our channel, Dennis Bank Forex. Today we are dealing with episode 5, which is the psychology of trading, and this is very important for new traders and old traders. So it's how actually a professional trader has to think. So why do most beginners lose money? So it's three things. It's fear, greed, and the fear of missing out. So the hard truth is 70 to 80% of the retail traders lose their money in the market. Less than 10% achieve constant profitability, and the number one cause of failure is psychological and not strategy. So actually you can have the best strategy in the world, but without the trading mind, you can't actually make it. And this is very hard because the human nature was designed against us in this trading journey, whereby it favors fear, greed, and the fear of missing out. It's just second nature. Yeah, so what are we going to cover today? Why psychology is the real edge in this trading? Why not the strategy? We are also going to cover the two enemies, which is fear and greed. We're going to talk about FOMO, which is fear of missing out, revenge trading, and tilt. We're also going to talk about the trader's mindset framework. We're going to talk about building emotional discipline. We're also going to talk about the trading journal, which is a mirror of what you're actually doing in this market. It's about how someone thinks, how someone feels, how someone controls their emotions. So actually the strategy will take 20%, whereby your entry, your technicals, your fundamentals, analysis, it just takes 20%. But most people, when they're actually starting, or those who are actually even trading, they think strategy is 100%. So most beginners obsess over this. Then we have risk management, which is the amount of money you're willing to place on every trade idea. So this carries 30% because protecting your capital is very important. So this is how much risk per trade, position sizing, and stop placement. So it is critical, but it's also teachable. So it's often understood but not applied, whereby you actually see many traders not even following risk management. Then psychology takes about 50% of the whole strategy. Yeah, so this is the discipline to follow your rules, patience to wait, emotional control when you're losing. This is the real work. So actually many people want to trade but they don't want to lose, and since trading is a game of probabilities, losing is inevitable. So you can have the best strategy in the world and still blow your account if you can't control your emotions. The two enemies, we have fear and we have greed. So these are the giants in the emotional roller coaster most traders deal with. So every bad trading decision traces back to one of these emotions. So we have fear. There is fear of losing. You close losing trades early. So let's say you are in a NASDAQ buy and it was really moving on well, you're seeing profits, and then it retraces to almost 50% of your stop loss. So now you're seeing reds. So the psychology of the brain is telling you to close the trade. But guess what? You close the trade halfway in loss, then it runs to your TP. So it is not the system that you're trading that's having a problem. It is that fear of losing that's disturbing many people. So many people end up unprofitable due to such factors. So you have the fear of missing out, whereby price hasn't reached your zone but you're already jumping in. We have the fear of being wrong, whereby some people will even fear to place a trade saying that they might be wrong, and it actually ends up being a winning trade. So you have analysis paralysis, whereby many people learn a lot of strategies, and one strategy is telling them to buy, one strategy is telling them to sell, and they end up not even trading at all. Then we have greed, whereby you have oversizing positions. Now, many people enter trading for the wrong reasons, whereby some people, they just want to make it big today in this one trade. So they end up over risking and spamming positions because they are seeing it all over internet. They think you just get rich from trading in one trade, which is wrong. So moving take profit. Let's say you had your take profit according to your strategy to earn $100, but because some people, they are too greedy, they just now start thinking going to a nice apartment, buying a new car, so they end up moving their TP to somewhere unreasonable, and price ends up taking them out. So you have chasing losses. Let's say now you're in a losing position, it hasn't hit your stop loss, and now you think to yourself that if I add in another position and it goes to my TP, I'll double the money. But guess what? You end up losing that too. Then you have over trading. Your plan is telling you to stop trading after losing one trade, but you end up having a lot of trades in that same day. Yeah, comment below if you've ever done that. Now we have FOMO. We also have revenge trading. So we also have tilt. So these are also high factors leading to many traders not being profitable. So these three emotions trap and destroy most beginner accounts. So we have FOMO, which is the fear of missing out. So price has moved 100 pips or 1,000 pips, and you didn't take the trade. You just jump in anyway. Remember, if you've seen our previous videos, we talk about market structure. So if it pushes and breaks structure, many people will have that FOMO. I didn't take the buy, I didn't take the buy. Then they will jump in, but that is a retracement phase. So they end up being smoked. So the fix is you just have to follow your plan. If your plan says buy in the retracement, buy the retracement. Don't just enter anyhowly. Then we have revenge trading. So this is the emotional retaliation after a loss. You've lost your last $50. Somehow you get more money and you're like, I need to get back my money. So you're doing this without even thinking. Yeah. Then that's all psychology. So you're also bound to lose. So the fix is after any stop loss, you have to step away from the markets. You'll find that most profitable traders take their time off the market and they're just doing other things, and they come back another trading day. So we have tilt, which is the emotional deterioration over a losing streak. Well, even the best traders, will have a losing streak. It's normal. So the fix is you predefine your daily loss. Yeah, look at your account, set a daily loss. So when hit, just get off the markets. That's simple and easy. So every professional trader has fallen into all of these three traps, and that is why trading takes time. Without education, it won't even work. That's why I've dedicated this 20 video series. This is video 5. If you haven't watched our first videos, check on the channel to check them out, to really educate everyone on this trading journey. This is the trader's mindset framework. So 5 mentorships that separate consistently profitable traders from the rest. Remember, we said only 10% would win in this game. So what separates the 10% from the 90%? So you need to shift from I need to win every trade, and then go to I need to follow my process every trade. So losses are a cost of doing the business. you have to think in terms of a win rate. So let's say if you have a win rate of 50%, yeah, that means that you're going to lose 5 out of 10 trades. So it's not set in stone that you're going to first have 5 wins first or 5 losses next. You have to treat each trade independently. So thinking like that will help you in your trading journey. So you need to shift from this trade will make me rich to this is one of my next 100 trades. So thinking in that abundance mindset will shift your pressure. It will help you out to follow your trading plan. You need to shift from I am angry, I need to trade more, to I am emotional, I need to step away. Remember, when you step away, you won't make many losses. You need to shift from the market took money from me to I chose the trade, I own the result. As I say, with a 50% win rate, you are bound to lose 5 trades. And with a risk to reward of, let's say, 1 to 2, 1 to 3, you end up being profitable. So you need to shift your mind from a beginner to someone who is operating in a business sense. Yeah, so you need to shift from I'll start journaling when I'm profitable to journaling is how I become profitable. Actually, many traders that are profitable, they actually journal every single trade. This is because every single day is different. The market is different, like in that given day, whereby this day will have news, this day won't have news. Like, they have to journal everything. Think about it like in a business term. If you don't know what you're selling and what you bought at how much, you're actually not in business to make profit. So trading is not any different. You need to build emotional discipline. So rules are only useful if you follow them when it's the hardest, and that is inside a trade. How to build discipline step by step. So you need to define these rules before you enter. So you need to write down these rules if need arises. You need to write them down, tick them step by step in order to take a trade that follows your plan. You need to set a daily loss limit and honor it. So most people who are trading prop firms, they are risking 1%. So if it's a $10,000 funded account, $10,000 funded account, you risk $100. So if it's past $100, you step away. So never move your stop loss to avoid a loss. So this actually happens whereby people shift from their plan to now having hope. You set your loss, and as price is coming to hit it, you extend it, hence increasing your loss. Never do that. You have to walk away after wins too. You know, this is the human mind. We tend to become very excited when we are winning and think we are invincible. Hence, many people will end up increasing their risk. And that is very, very dangerous. You can actually lose all the money you've made. So you trade your plans, not your feelings. This is a common problem whereby your plan is telling you to sell, but according to your feelings, you've been on the internet, you've been on TikTok, everyone is buying, yet your plan is telling you to sell. Don't follow your feelings. Just follow your plan. That is how you win. That is how you get the edge. So this is the emotional cycle. We are here to talk about it. You have to recognize where you are in this cycle, because if you don't know where you are, it's very hard for you to find where you're going. So you need to actually understand where you are. Phase 1, optimism. So new trader, strategy looks great on paper, ready to make money. That's how we all begin, right? Then step 2, excitement. First few wins, this is easy. Confidence builds dangerously fast. Now you think you're invincible. Step 3, overconfidence. Now you increase the lot sizes. Your plan tells you to use lot 1, you're using lot 3. Rows get bent I know what I'm doing. So step 4, the anxiety. So after leaving your trading plan, now you hit some losing streaks. So now doubt creeps in, roles become inconsistent. You stop believing in yourself. Now step 5, this is denial. Now the market is manipulated. You blame the shift outwards. You take no accountability. You start saying this broker is haunting me. And this happens to many people. Desperation. That is step 6. So revenge trading habits begin. Lot sizes spike, daily loss limits ignored. Now you feel like you need to make the money back, and now you're doing whatever possible in hope and not in strategy plan. Now step 7, which is capitulation. So the account is blown, trading doesn't work, and many people quit from here without following a plan, following their emotions, not being educated. Now they say Forex is a scam. And since it's 90%, that's why you hear from the internet many people saying trading is a scam. Now at step 7, that's where many people quit. So the exit ramp, accepting losses are part of the process, starting over correctly. And that's why I've made this 20 video series, to make sure that we study quickly and correctly. So the trading journal. This is the single habit that separates traders who improve from those who repeat their mistakes. So yesterday, if you recorded that you overtraded, now you subconsciously know that you overtraded, so you take accountability. So why journal? You cannot improve what you don't track. Most traders repeat the exact same emotional mistakes for months. So this is a self-check. This is a rain check to help you. So what to record: date and time, pair and direction, your entries, result, emotional state, how you're feeling when you're taking the trade, what the rules followed or not, screenshots to actually show the visual graphs, the lesson learned. So these are the weekly review questions. You have to ask yourself, did I follow rules on every trade this week? What emotion caused my worst trade? How were you feeling that day? Were you stressed? Which session produced my best results? Actually, the best traders, they follow their system and differentiate whether they make more money trading Asia, trading New York, or London. So yeah, and did I stick to my daily loss limit? What was my win rate and average risk to reward this week? You have to be cognitive of all of that. Which pair performed the best? Should I focus there or not? What one habit will I change next week? So through doing all of these, you're becoming better, and that's what professional traders do. So now it's showing you that it's the game. The game is more mental than what you thought, that you just buy and sell. This is the lesson recap. What have you learned today? Take a look at all of that. 70 to 80% of the traders lose, and I think now you understand why. So you understand what strategy contributes, what risk management contributes, and what your psychology does to your trading. So you understand now fear, you understand greed, you understand this fear of missing out. You understand now to think in probabilities and not to risk it all in one trade. You understand what a daily loss limit looks like. You understand that the journal is your best mirror. So tell me in the comments, fear or greed, which one costs you more? Yeah, tell me in the comments. Let's be honest.